Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. The firm only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability.
Welcome to Navigating Retirement with Rick Durkee.
And we're back here on Navigating Retirement, another great edition of the program that is the resource for Charleston and Low Country area savers and investors, and our resource here on the program for important guidance, information, and financial perspective is the founder and CEO of the Coastal Financial Planning Group. Rick Durkee once again joins us. Rick, welcome back in.
Good morning, Peter. Good morning to everyone from Charleston, South Carolina, and across the United States. Hey, we're available. We're virtual. We're everywhere now. It's great. This is great. I love being able to tell our story to everyone that listens in on navigating retirement.
Always a positive side to even negative events and circumstances is that, Rick, we've all adapted. We've been forced to a good bit, but we've done it. We've found a way to get the message out, get the important information out that people, savers, investors, those serious about their planning and their financial future really need to hear here on Navigating Retirement. And if you've got questions or concerns, ladies and gentlemen, if you'd like a complimentary review of your financial progress, pick up the phone, give a call. The team from Coastal Financial Planning Group does offer that opportunity for a no cost, no obligation, complimentary and comprehensive review and evaluation. They call it the strategy session. 800-491-6220 for that three-step review process, or just to get a few questions answered that have been on your mind. 800-491-6220. You can also visit online, cfpgroup.biz, cfpgroup.biz, a great resource online that is available to you. Rick, the past several weeks, we've been talking about defined outcome investing. And we've been talking about this in terms of growth on our money. What is our outcome going to be when we invest $1? How much is going to be there at some specific point in time into the future? But I know another big area where people want a defined outcome is with income. At a certain point in time, we've worked real hard, we've saved, we've accumulated money, and then we need that money to pay us an income so that we can retire comfortably and with confidence. So with the market being unpredictable, it's kind of difficult, kind of hard. It is a challenge to understand how much income we are capable of producing consistently. But there are ways and methods, just like there is defined outcomes available with accumulation and growth. If you are looking for a steady, predictable, durable stream of income, you can also have defined outcome for income.
Yeah, that's right. That's a tongue twister. Say that one three times. Yeah. But definitely when we develop our retirement income plan, we want to show those income streams to offset expenses throughout our retirement years. So we look at periods of time where we'll take out money from different areas, some money now, some money later, and maybe some money latest or never in retirement. And we structure those buckets so that they create income for us and income streams for us to take care of our expenses during those times. Now, it's an important feature to know that we can look at our income from a standpoint of definition. We know what we need for income to meet our expenses, so let's just develop a plan that creates the income streams through our investments or through our working capital, I guess we'll call it, because, once we're not working anymore, that working capital or the retirement assets that we saved are the assets that have to work for us. They have to create the income streams. So we look at defined outcome investing for income a little bit differently than accumulation. And we also have to evaluate, Peter, the ways that markets act during your spend down years, because if we don't look at that, we could get blindsided. So I'd like to spend a minute with you and talk a little bit with our listeners here today on our podcast, Navigating Retirement, about the three different types of markets. Now, the three types of markets, we've covered those before. I'm going to go through them kind of quickly. If you want to visit our podcast, previous podcasts on defined outcome investing for accumulation, you can learn about these three markets in a little bit more detail. But for today's purposes, let's talk about them really quickly again. You have normal markets, you have market corrections, and then you also have a market recovery period. Very quickly, the normal market is the market that just slow, steady growth. We're happy with that one. No real corrections, nothing to worry about. But that second market, a market correction, is what we all fear typically. We're not really happy about a market correction unless we have structure in place that defines the outcome so that we have the income streams that we need. Now, during these market periods of corrections, we see that the market sells off by 5, 10, 15, 20, sometimes as much as 50% as it did twice in the lost decade of 2000 to 2010. We definitely want to avoid those periods of time when we're taking income out of a pool of money. It can be devastational as far as how long that money will last, and the number one goal of all retirees is to make sure that I spend the last check on the day that I die at the worst case scenario. Mm-hmm. Okay, best case is there'd be something left over for me to pass on for a legacy. So market corrections are the second type of market. Market recovery are the third type of market. And in that type of a recovery, we're just looking at how is that market acting. We could be in a quick recovery, a quick bounce back. We could be in something that's a little bit more elongated or looks like the shape of a W during that time frame, and then eventually gets back up over time to its break-even point where it was at its high point before that, before it started its drawdown period. So those are the three types of markets. We want to be really careful that we are choosing two of those three that we'd like to outperform the benchmark indexes in, because if we look for all three, I think we're looking for our cake and eat it too. There's no way that you can say in a risk and reward comparison or world that you can have great risk and great returns all the time. You have to take more risk to get some volatility that could be negative to be able to get fair returns over time. And that's how we look at defining that outcome for income when we set the structure for how much money we're willing to lose during our withdrawal period. And structured notes are a product that does that, Peter. We'll talk more about those in just a minute, I'm sure.
Well, I know, Rick, that you have been a proponent and an advocate for income planning for many years here on the program. As we're making the transition to retirement, probably one of the most important components of the plan, and as you've stated very often, one of the most commonly missed and overlooked components of the plan is having that specifically structured income plan. And if you want to get an income plan put together, ladies and gentlemen, if you don't think you have one or are uncertain of what it looks like, pick up the phone, give Coastal Financial Planning Group a call, 800-491-6220. That's 800-491-6220, 800-491-6220, 800-491-6220, because that income plan really is, Rick, what's going to sustain us and give us the predictable income and something to fall back on regardless of what direction the market is heading.
Income plan is critical to any type of retirement plan. Hey, if you want to find out more, set up a 15-minute virtual consult. No worries, no stress. You'll get your outcome defined for you very quickly during our process. Call us today, 800-491-6220. Have a short time period today. So, hey, Peter, how about if we just say, we're going to talk a little bit more about some different types of structured notes maybe in a future podcast, or people can reference all of our podcasts through our webpage at cfpgroup.biz.
cfpgroup.biz, your resource, ladies and gentlemen, to get all the information, to listen to past editions of the podcast. Pick up the phone if you would like individual time and attention paid to your specific financial situation. Rick Durkee and his team standing by, more than willing to help get a couple questions answered, direct answers to your specific issues or concerns, or that comprehensive review where the team of qualified professionals and their trained eyes and years of experience can help you identify, pinpoint red flags or holes that have been left unaddressed in your plan, or just opportunities to be more efficient in leveraging your dollars and getting that defined outcome that you're looking for. Pick up the phone to get started. 800-491-6220. That's 800-491-6220. Rick, we always appreciate your time and guidance.
Thank you, Peter, and thank you to our listeners, our loyal listeners. Be sure to share us. Facebook, LinkedIn, anything that you like, please share us and like us. Send us to your friends and family or people that you care about that can benefit from the information we've shared with you today.
Always appreciate likes, shares, subscriptions. Hit those buttons, ladies and gentlemen, so that you can be notified when a new and the next edition of Navigating Retirement becomes available. And of course, give a call if you've got any questions on your mind. 800-491-6220. We'll talk to you next time.
Catch more of Rick Durkee and Navigating Retirement by visiting cfpgroup.biz.
While we believe the information in this broadcast is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decisions. Investment advisory services are offered through Fusion Capital Management, an SEC-registered investment advisor. SEC registration is not an endorsement of the firm by the Commission and does not mean that the advisor has attained a specific level of skill or ability. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs. Early withdrawals may subject the owner to penalties, fees, or taxes.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.